In the latest, on Thursday, Malian military helicopters landed unexpectedly at Barrick's Loulo-Gounkoto mine. The company said that the military choppers seized over a metric ton of the precious metal from one of the world's largest gold complexes. The bullion was worth over $100 million. West African country's military junta has tightened their grip on foreign companies that are mining gold. Their latest target, Canada's Barrick Gold. Malian authorities have seized tons of gold from a mining site operated by Barrick Gold as the junta-ruled nation looks to get a fairer distribution of revenue from its mining sector.
For over a century, the West has been mining Africa's gold and quietly shipping it into their vaults and luxury markets. But that game has just been shattered. In a move that is shaking the foundations of Wall Street and the City of London, Mali has just blocked $100 million, 0 cents worth of gold extraction. They said it could not be done. They said African countries were too dependent on Western investment to ever stand up for themselves. They were wrong. Mali just proved that a landlocked African nation can bring some of the world's most powerful corporations to their knees with one simple word: no. This is not just another trade dispute. This is an important shift in how African nations are approaching their natural resources, and it is happening right now. Before we continue, hit that like button to help us beat the YouTube algorithm. Mali sits on some of the world's richest gold deposits. With an estimated 800 tons of gold reserves, the country has been a magnet for international mining companies for decades. But what most people don't realize is that despite being one of Africa's top gold producers, Mali has seen very little of the wealth generated from its own resources. For years, Western mining companies have operated massive gold extraction operations across Mali, shipping billions of dollars worth of gold to international markets while the local population remained among the world's poorest. This is not an accident. It is the result of carefully crafted agreements and contracts that heavily favored foreign corporations over local communities. The current mining agreements in Mali, like those in many other African countries, are rooted in colonial-era extraction models that prioritize the needs of foreign powers over local development. These agreements typically involve long-term contracts with minimal royalty payments, tax exemptions, and very little requirement for local value addition. The gold extracted from Mali's mines is shipped raw to refineries in other countries, where the real value addition takes place. This means that Mali receives only a fraction of the final value of its gold, while other countries benefit from the processing, refining, and manufacturing stages. The numbers tell a very clear story. Mali produces approximately 65 tons of gold annually, worth roughly $4 billion, 0 cents at current market prices. Yet the country ranks 184th out of 189 countries on the United Nations Human Development Index. But now, the people of Mali have had enough. What started as quiet complaints in small towns has turned into a powerful movement. This disconnection between resource wealth and human development has become a rallying cry for change across the continent. Since the military took power in 2020, Mali's new leaders have been drawing a line in the sand. They are saying, this is our gold, our land, and our future, and we are taking it back. They brought in new rules to give the country more control, like raising Mali's share in mining deals from 20% to 35%, and going after companies they say have been hiding profits or smuggling gold out of the country. And then they made their biggest move yet, the kind of move that made the world sit up and pay attention. In July 2025, Mali seized over $100 million, 0 cents worth of gold from the Loulo-Gounkoto mine, one of the biggest in the country, run by Canadian company Barrick Gold. The government did not just make a statement, they did something that no one expected them to do. The Loulo-Gounkoto mine is a gold-producing powerhouse, accounting for about 15% of Barrick's global output. It is a cash cow for the Canadian company, generating nearly $950 million, 0 cents in revenue, in just the first 9 months of 2024. But Mali's government says Barrick has not been playing fair. They claim that the company owes hundreds of millions in back taxes and unpaid dividends, pointing to an audit that uncovered what they call base erosion and profit shifting, basically moving profits to low-tax countries to avoid paying Mali what it is owed. However, these issues did not just start. tensions have been building for years. In 2023, Mali's junta started auditing mining contracts and introduced a new mining code to increase the state's share of profits. Barrick pushed back, saying the tax claims were unfair. Things escalated in 2024 when Mali detained 4 Barrick employees and issued an arrest warrant for the company's CEO, Mark Bristow, on charges of money laundering and violating financial regulations. By January 2025, Barrick halted operations at Loulo-Gounkoto after Mali blocked gold exports and seized 3 tons of gold worth $245 million, 0 cents. But the latest and surprising chapter came in July 2025, when Malian government helicopters swooped into the mine and took another ton of gold, valued at $107 million, 0 cents. A court-appointed administrator has announced plans to sell this gold to pay for operational costs like salaries for workers and fuel for the mine. Barrick is angry and has called it illegal. They said they would take the fight to the international court. They have already launched arbitration proceedings, arguing that Mali's actions violate international treaties, but Mali is not backing down. The government says this is about fairness. They argue that foreign companies have reaped massive profits while Mali struggles with poverty and conflict. The seized gold, they say, will help keep the mine running and support local communities. This seizure is not just about one mine. It is a signal to other companies. Other miners like B2Gold and Resolute Mining have faced similar pressure, with some paying millions to settle disputes. The warning is clear: if you want to operate in Mali, you play by the new rules or you are out. It is not just about the gold, it is a message, and behind that message is a bigger shift happening across West Africa. It is part of a wave called resource nationalism, where African countries are demanding more control over their natural wealth. It is about who gets to decide how Africa's resources are used. Mali, Burkina Faso, and Niger are leading this charge, and it is shaking up the old way of doing things. For years, Western companies have operated under agreements that gave them huge profits while host countries got crumbs. In Mali, for example, authorities estimate they lose up to 15 tons of gold a year, worth about $860 million, 0 cents, because of smuggling and informal mining. That is an amount of money that could have built schools, hospitals, or roads, but instead, it is slipping away. But Mali is done being exploited. They are now taking control. They have audited mining contracts, found what they call irregularities, and are demanding hundreds of millions in back taxes from companies like Barrick. This push is not just about money, it is about true independence. Mali's military leaders, like many in the region, argue that Western companies have exploited Africa for too long, mostly with the backing of Western governments. They point to the history of when colonial powers drew borders, extracted resources, and left African nations struggling. Even after independence, the West kept control through unfair trade deals and political influence. Now Mali and its neighbors want to rewrite the rules. However, while this video is not about Ibrahim Traoré, his influence is the key to understanding Mali's actions. Traoré has become a symbol of resistance against foreign control. In Burkina Faso, he nationalized gold mines, built a state-owned refinery, and demanded that foreign companies hand over a bigger share of profits. His message was simple: African resources should benefit Africans first. The impact is being felt beyond borders, especially in Mali, where leaders now view Traoré's bold stance as a guide for resisting Western control. Mali's government is now following a similar path. They have revised their mining code to demand more revenue, cracked down on informal mining, and even detained foreign mining executives to pressure companies into paying up. The $100 million 0 cents gold seizure is a bold example, and it has sent a message to every corner of the world. Mali is serious about keeping its wealth at home, even if it means clashing with global giants. They have long been relegated to the role of raw material suppliers. Now they are asserting their right to be equal partners in the development of their resources. The gold seizure is a page out of Traoré's playbook. Take bold action, assert control, and don't back down. Mali's junta has also deepened ties with Russia, hiring mercenaries and exploring Russian investment in mining. This is not just about gold. It is about building a new regional alliance that challenges the West's grip on Africa. This shift is driven by a growing recognition that natural resources should benefit the people who live above them, not just the companies that extract them. But while this creates challenges for Western mining companies and global supply chains, it also presents opportunities for more sustainable and equitable development models. So, where does this leave Mali and the broader Sahel region? The gold seizure and Traore's influence point to a new era, but the path forward is uncertain. For Mali, the immediate challenge is keeping the Lolo Gonkoto mine running. The government has appointed an administrator to oversee operations, but restarting a complex mine without Barrick's expertise will not be easy. If they pull it off, it will prove that Mali can manage its own resources and inspire other African nations. The bigger picture is the Sahel's shift away from the West. Mali, Burkina Faso, and Niger have pulled out of regional groups like ECOWAS and ended military ties with France. They have formed their own alliance, leaning on Russia for support. This could reshape the region's geopolitics, giving Russia and maybe China a bigger foothold. For the global gold market, Mali's actions could keep prices high by tightening supply. Investors will be watching closely to see if other African countries follow suit. If resource nationalism spreads, it could reshape the mining industry, forcing companies to rethink how they operate in Africa. What is emerging from this situation is not necessarily anti-Western sentiment, but rather a demand for more equitable partnerships. Mali has indicated that it is willing to work with international companies, but only under terms that provide greater benefits to the country and its people. The new model being proposed includes several key elements. They are demanding higher royalty payments that reflect the true value of the resources being extracted. In addition, requirements for local processing and value addition that create jobs and build industrial capacity within Mali, and finally, technology transfer agreements that help build local expertise and reduce dependence on foreign technical support. Environmental protection is also a crucial component of the new approach. Previous mining agreements included minimal environmental standards, leading to significant ecological damage in mining areas. The new framework demands comprehensive environmental impact assessments and long-term rehabilitation plans. But most importantly, the new model includes provisions for local ownership and control. Rather than simply granting extraction rights to foreign companies, Mali is insisting on joint ventures and partnerships that give the country a direct stake in mining operation. The outcome of this situation will likely influence resource governance policies across Africa and beyond. It represents a test case for whether it is possible to balance foreign investment with national independence and whether more equitable partnerships can emerge from traditional extraction relationships. As this story continues to unfold, it will be important to watch not just the immediate economic impacts, but the longer-term implications for international development, trade relationships, and the global economy. The decisions made in Mali today may well shape the future of resource extraction and international partnerships for years to come. Recent geological surveys have identified new gold deposits in Mali's northern regions that could potentially double the country's known reserves. These discoveries have intensified international interest, but they have also strengthened Mali's resolve to maintain greater control over its mineral wealth. The $100 million 0 cents in seized gold may seem like a relatively small amount in the context of global markets, but its symbolic value is immense. It represents the beginning of a new chapter in African resource governance, one where countries are no longer willing to accept unfavorable terms simply because that is how things have always been done. This is just the beginning of what promises to be a fundamental reshaping of how the world's resources are extracted, processed, and distributed. The influence of leaders like Traore is spreading across the continent, and the old models of resource extraction are being challenged in ways that seemed impossible just a few years ago. The question now is whether Western companies and governments will adapt to these new realities and work toward more equitable partnerships, or whether they will continue to resist change and risk losing access to Africa's vast natural resources altogether. The answer to this question will determine not just the future of mining in Africa, but the broader relationship between developed and developing nations in the 21st century. What do you think? Is Mali right to seize control of its gold, or are they risking too much? How far will Traore's influence spread, and what does it mean for Africa's place in the world? Drop your thoughts in the comments below. If you enjoyed this breakdown, give it a thumbs up. share it with your friends, and subscribe for more videos on global stories that matter. Hit that bell so you never miss an update.